So you probably see ads online saying, get rich quick, trading stock market or follow this algorithm. You just go to TradingView, search up an indicator, and you add the indicator, you follow the indicator. It's going to sell you buy and sell signals or this or that. Or there's a bot that, you put money in like $1,000 and it will make you $10,000. A lot of that stuff is deceiving. Real trading is not like that. You are trading against the smartest people on the planet, okay? And they are not going to let you have their money. They're not going to give you their money. They're going to look into a lot of things before they make trades to make sure that they're successful. So, you know, there's a smart person out there that is thinking right now that we are going to go up. And then there's also a smart person out there that is saying we're going to go down. Okay, so there's always, you know, that going on in the stock market. There's always a buyer and a seller. And they both are smart, they both make money. They both are smart. It just happens to be who is right this time. Okay. So if you see those ads, those are deceiving. Like big firms like, Goldman Sachs and these hedge funds, HFT firms, high frequency trading firms, they make fortune. They make a lot of money. And if you think they're just following a candlestick pattern, um, you are wrong. They're not just following candlestick pattern. They're looking at a lot of other things. If it was just easy to just follow candlestick pattern to make money, you know, then everybody would be Warren Buffett. But it's not that, you can make money following candlestick pattern. Yes, it works, but you also need to know the context of why what price is doing and why it's doing. Um, so that is really important. So like if you um, watch like CNBC or like you're on Twitter or something, you will see a lot of traders, they talk about the channels which it's trading in. They talk about the prior highs, the prior lows, and things like that. But you don't see them calling, oh, this is like a shooting star or Harami or candle or, um, they don't do that. So like following that is not good, because you can't be like, oh, I saw a dark cloud or a shooting star and I sold because of that. I bought because of that. So that's not the way of trading. So I wanted you guys to first understand that um, before we move forward. So one thing first you need to understand is that people think that the first bull reversal is going to lead to like an uptrend. Okay, 80% of the time that's not going to happen. Okay, um, just because you see a double top doesn't mean you're going to see a price rejection. Just because you see a triple top does not mean you're going to break out of it. Okay, um, what you want to do is first thing is you want to look at higher time frames. Okay, you want to trade 10 minutes and up. If you're new to trading, you want to trade higher time frames. If you have been trading for a long time, you can trade lower time frames because for that you need a lot of discipline. Um, but your goal should be to trading level to level. Okay, everything else is noise. Okay, and I'm going to break it down to you um, how we look into that. Okay, so let's just say we go on the hourly. Okay, if you're a day trader, you want to go on the hourly and the daily. But first, you want to look at the hourly. You can see that price, is going up, right? And before we go down there, we gotta find the last previous level that broke. So this is a level area that broke out. Okay, so remember this level. Last time bulls stepped in was right here. They held this level and we continue going up. One thing you have to remember is price is going to always come back and test this area. Why? Because when orders are placed, not all orders are placed. Okay, there are many people that place orders, but not all of them are going to get filled. Okay, so prices will come back here to fill these orders eventually. And if there are not that many orders here, then it will go to the next level where orders are. And that's what algorithms do. The point of algorithms are to push price to the areas where orders are, fill those orders, and then go to the next area where other orders are sitting. And that's what it does. So in the market is always trying to find a fair value price. Like, it's like, okay, this is an area we want to keep the price in. They could be like, this is an area that is too expensive. This is an area that is too cheap. We want to stay in between. And that's what you get, a trading range. And once the price, the fundamentals, or any news or any event change that, then the market decides that this is too expensive. We want to go down. Okay. So eventually, price has now come back to this area. The first touch of an area from previously where there were a lot of buyers, majority of the time you can expect a small bounce. Okay, so we touched this area once and we had a small bounce. Okay, if you look here, we had these buyers stepped in here from this area that hadn't been touched. We were trading above. We came down here and what happened? We had a small bounce. So how do we determine how big of a bounce we can get? Well, there's two things. You want to look at how big of the candle there was when first buyer stepped in, and you can expect a bounce half of that or a little bit bigger. Okay. Uh, so first time you can expect a bounce. So we had a bounce and we went up. Okay. So you see buyer stepped in, we went all the way here. We had a bounce, went all the way up here. Okay. Now, since these orders, like I said, were filled, um, like I said, like not all orders get filled and price came back down here, that means that all the remaining orders that were there, they all got filled. And now there might not be any more orders, um, you know. So next time when breaking this area is going to be easier. Okay. So once it's easier, you know what's the next level that the price can go down to. You want to always look at the big areas where you saw the initial reaction. That's like your strong area, and you can mark that area as red. And areas in between, you can mark those as your partials area, where you're going to take partial profit, and you can mark them a different color. Okay, you can mark them, let's just say yellow or something. Okay, the reason we look at bigger time frames, like 10-minute and stuff, is because when price is breaking a level, sorry, I'm going, why am I here again? Let's draw this line real quick. So we had fire step in here. Okay. So we had this area we had marked. Let's just make it, well, this is not exact, but my point being is once you have that area which broke, price is going to start to test that area again to see if it wants to continue going up, to maybe grab more orders that are here, or it's going to continue going down because that's where the more orders are. So watching where the candles are closing is really, really important. Okay, so as you can see, we went down, then we went up. Okay, candles are closing here, and then we had a push down and candles close here. Now you know that this area is not strong enough and the candles are closing above, I mean closing below, and you will see price automatically follow towards the next area where orders are sitting. And we drew this yellow area, which was um, a weak area, and this was like a red area because this was a key area. But this was a partial area. And what happened in the partial area? Price came down, went up, and then eventually broke through this and went to the key area that we had um, plotted before. So the goal is to always trade level to level. Okay, you do not want to be trading in the chop, because once the initial first touch of that area had happened and we saw a move up, right? That's the only time you want to play it. But after that, this is range. You don't want to play in this, because this you can get stopped out. You can have bad plays here because you don't know what price wants to do. Price could stay in this range for maybe 2, 3 days, um, and then decide when it wants to break out. So that is very, very important. Okay, and we were just talking about this, that people were expecting that, the first bull flag, you're going to have a reversal. It's not always the case. This was an area that broke, and now price is continuing going down because it tested the key area, it went up, came down, and it's continuing going down. Okay. So yeah, so 10-minute candle, you always want to watch. Um, so yesterday, I believe I had these areas. I'm just going to plot them real quick. All right, so yesterday I had plotted all these levels. I was saying wait 10-minute candle to close above or below these levels to take a play. 56.15, 56.25, 56.30. So once 56.15 breaks and it holds, we can go here. And if it not able to hold 55.90, then these are all the levels. Okay. I know I just marked all of them red. It's just to show you. So this is your range. As you can see, we came down, right? And we have tested this area from previously where buyers stepped in. And now price is trying to determine if this is an area where this is a fair value price. Okay. And market is going up, testing the top of the range and deciding if it wants to go up, break up, or break out of here and go to the next areas, or is it going to eventually come down and break this area and then continue down? And what happened? We came down, and like I said, 56.90 was the key, 55.90 was the key area, and you can see what price did. Price went up and test, and you wait for the candle to close. The reason you want to see the 10-minute candle close, because this will show you the bigger picture. If you're just looking at the 1 minute time frame, you are going to, or like 3 minute or 2 minutes or whatever people see, they're going to see this and like, oh, we're going up, or they're going to see this, we're going to going up, and they're going to get in and then they're going to get stopped out. Okay. You need a lot of discipline to trade, because majority of the time you might be in areas like this and you're trading in here on a 3 minute, and this is does not give you peace of mind. Okay. And trading around here, you don't want to trade where market is trying to determine what's a fair value price. Okay. You don't want to be trading in that. You want to wait until the price comes to you. You want to wait for the trade to come to you. So once this level broke, like I said in the Discord, that once this level breaks, we have 55, 75, 60, and these are the areas you want to take profit at. So how do we have these levels? Okay, we have these levels based on the last time. Always you want to watch is was the last time buyer stepped in and how big the candle was. If the candle is small, it's going to be easier to break, okay? But if a candle is big, like this one, you might expect a bounce, okay? So what happened yesterday? That, like I said, the 55.25 candle was a big candle, right? We had some big buyers stepped in, whereas these candles were smaller, so orders were easier to break through this. The price was easier to break through this and wanted to go to an area where there were a lot of buyers. Okay. So once we got out here, remember I talked about the first touch at an area where previously there were a lot of buyers, you can expect a big bounce. Okay. Or a bounce equal to that candle or a little bit more. And what did we do? We took SPX 55.50 calls. Okay. Got them at 65 and we sold them for $6. We waited for the trade to come to us. Okay. We were not taking trades in here. We would wait until the price comes to an area, and that's where you want to take your trade. Okay. So we did take trades here all the way down, and then reversal, since it's the first touch, it hasn't been touched for a while since it went up. We took this trade. Okay. Um, so understanding the price action and trading on bigger time frame is really the key. Um, I want you guys to start plotting these, and do ask me questions in the chat, and I'm going to answer all of them.